Let's talk about non-recourse loans and how they can help you and your business. Hey, I'm Tim Diesel. I'm a commercial real estate consultant. This channel is designed to give you tips and strategies in your investing business. If you're a broker, this will definitely help your clients. All right, let's talk about non-recourse loans and why they're so popular and why they can be confusing if you think about it. So what I want to do is break down the overall concept. I don't want to define what it is. You can go on and research it and check up videos, and you can get all kinds of insights of what they're sold to, how they're done, the investors. I don't care about any of that. What I want to do is pretty much let you know what your options are, and you decide, is it a good deal for your business? Now, if I'm going to buy a 20-unit apartment building, and in this example, I'm going to say it's $1 million. What's the difference if I get a non-recourse loan as opposed to a recourse loan, like a regular loan? All right. And just so we're all on the same page here, a non-recourse loan is a loan that is given to a borrower, and it basically, if something goes bad, and I'm simplifying it here, I don't want to give you the exact technical definition. If something goes bad with that loan, the investor is not on the hook for any liability. So they can't come after you, they can't file liens, all that other crap. You give back the keys to the bank. So we're gonna try that again. It's $1 million loan. Let's say you put 20% down. So you're on the hook for 800 grand. Maybe a year or two, you default, goes bad. All you do, you walk away. And it's like nothing even happened. That's a non-recourse loan. And they're very attractive. So when you're gathering a pool of investors, what I've noticed is the syndicator or the ringleader or whatever, they're pitching this non-recourse loan as no risk. Well, if you think about it, if you're buying a good property, why does it matter if it's a non-recourse loan or a recourse loan? So my question to you is, just because it's a non-recourse loan, does that mean it's safer? Well, absolutely not. It really depends on the project, right? It depends on what you're buying. If you're buying a property and it's in really good shape, really good condition, and you have a plan, a non-recourse loan should have an impact, but it should not be the one true defining factor of how deals are done. They can be very, very helpful, but don't let a non-recourse loan make or break a deal. The truth is, you should only be buying good deals. You should not be buying a deal that if you really think about it, when you're getting into a non-recourse loan, why should that even be an option? Why should you be thinking, hey, if this goes bad? Well, it should never go bad, really. You don't want it to, but it's a really good safety play. What I've noticed is the banks now, they're really giving out these non-recourse loans, these non-recourse products. There's a lot of them out there. And they're made to entice you to take more of a risk, right? To gather people up, go out there and do it. So they do have advantages, don't get me wrong. I'm not telling you don't do them. If you have the option, always go non-recourse. But don't have your deal contingent upon you getting this one loan, getting this thing one driving factor. Because even if you have a recourse loan and you do a great job and you just do an average job and you get things moving, you're not gonna have a problem if you're turning property around. And if you're buying property that's already spinning, it's already having good things going on with it and you don't have to do a lot, then why would a non-recourse have any impact? You're already buying good property. So you're really looking at the terms of the loan. Not looking whether it's not recourse or not. Now, if the terms are better, then obviously it's a no-brainer, right? But you're looking for your lowest interest rate, the term, how long it's stretched out, how many years are interest only, if you have any. So there's all kinds of things that fall into play here. So we've defined what a non-recourse loan is, and we know if it's a good or a bad deal. Now, I want to share with you a quick story. A few years back, an investment group that I know, they actually were buying, I think it was a 40-unit building, and they pulled everyone together, and I think there was 7 of us. And the way it was pitched to us at the time was, guys, this is a non-recourse loan, no one's at risk. Now at the time, I wasn't very experienced. I thought that's a great idea. What do I have to lose? The worst that could happen is I lose my money, nothing else comes after me. Now, luckily, everything went very well. Everything was great. When I sit back and I think about what I learned from that experience is, that should really never be an option you present to your investors. It should not be, hey, if this ever goes bad. That should be kind of a last effort on your part. If they're asking about the financing, if they are asking, hey, what happens in this case? That's how you present it. You should never be looking at a deal and saying, well, if worse comes to worse, yeah, things always goes bad. But look at the loan term, the package, the rates, everything about that loan. Is it a 5 years, is it a 7 year? What is so good about that loan? The benefit should never be, well, if I default on the property, I don't have to pay it back. That's ridiculous. All right, that's all I got for you today. Like this video, subscribe to this channel, especially if you like the information, you found it useful. Send me comments or questions if you have any. Thank you guys so much for watching.